This is Matthew Kratter's Bitcoin University. Today I want to talk about the upcoming Bitcoin death cross, and you'll have to excuse my voice today. I'm coming down with a head cold. I wanted to start just by talking about Bitcoin's price, which I don't talk about too often on this channel, but currently trading at about $96,000, $97,000 per coin. I think it's important to think of the context of this. When Trump was elected on November 5th of 2024, the price of Bitcoin was about $69,000. When he was sworn in January of this year, the price of Bitcoin was $102,000, so we're actually trading below where we were when he was sworn in. When he announced the strategic Bitcoin reserve in March of this year, Bitcoin was a little bit below where we are here at $89,000, $90,000 per coin. And then the end of year price from December 31st, 2024, which does matter, of course, when people are looking at their annual performance, and institutional investors are usually very concerned with this. But we went out at the end of 2024 at 93,381, so just barely hanging above that price. If we look at this pattern, which we talked about before, which is the pattern that's at least held for the past few cycles, it didn't really hold really early in Bitcoin's history, but this pattern is 3 up years, 3 green candlesticks, so these are annual candlesticks, and if the candlestick is green, that means that the year closed higher than it opened, and then you can see the wick, which shows the high and the low of the year. But we saw a similar pattern beginning in 2015, so we had 3 up years, 2015, 2016, 2017, and then we had a red candlestick where the market closed, where Bitcoin's price closed lower at the end of the year from where it opened at the beginning of the year. And then we had the same thing in the 2019 cycle. We had 3 up years followed by the bear market of 2022, and we're now rapidly approaching the end of another 3 years of it being up, 2023, 2024, and just barely 2025. Now, the way this works is it's usually in the second year of the cycle where you get the halving. So we got the halving in 2020, we got the halving in 2024, and then you get one more big up year the following year, and then the following year is a bear market. Now, of course, these patterns don't have to hold, but the funniest outcome would certainly be if these just continue to hold in spite of the fact that everyone recognizes these patterns. So under this pattern, we don't really know where the ending price would be at the end of 2026. If this holds, basically we need to know the opening price on January 1st, 2026. And then if this pattern holds, we would expect Bitcoin's price to be significantly lower, or at least lower in 2026. Again, not something I would trade, but an interesting pattern. I wanted to return to this idea we've covered before from Nick Szabo that Bitcoin is already in a bear cycle masked by the debasement trade. Monetary debasement historically has just been when a government, for example, makes new coins with less gold or silver in them, sort of late Roman Empire vibes. Fiat monetary debasement, because our money is not backed by precious metals, is basically just increasing the money supply, the famed money printers. And monetary debasement has always been, along with taxation, one way that governments have been stealing from people over thousands and thousands of years. But we can see the US dollar monetary supply, this is the M2 money supply, continuing to rise in 2025 after a pullback over the past few years. But the major trend here, of course, is more and more US dollars, and thus lower purchasing power for those who hold dollars. As Szabo points out here, the Bitcoin cycle top happened around New Year's Day in 2025, but in dollar terms, the bear has been mostly masked by the debasement trade. Price it in gold and you'll see the top. I think this is a useful way of doing it. And so what this price is, it's the price of Bitcoin divided by the price of gold. And when this chart is moving down, that means that gold is appreciating at the expense of Bitcoin. When this chart is moving up, it is Bitcoin appreciating at the expense of gold. We saw sort of a double top pattern at the end of the last bull market, where gold then began to outperform Bitcoin during the bear market. And we've seen something similar. This almost looks like a head and shoulders pattern if you want to do that. And it's hard to know, of course, how low we will retrace. But basically the peak here happened at call it mid-December of 2024, so shortly after the election. And then Bitcoin has been losing value to gold ever since then. So this is one way of talking about monetary debasement if you want to price Bitcoin in gold. If you're enjoying this video so far, I'd pause just really briefly here to ask you to help to support this channel. Hit the subscribe button, that does really help. Leave a like, leave a comment, question, suggestion for a future video, and share this video with a friend or family member. And I think one of the problems in 2025 has been we had these two big drivers of Bitcoin demand, or demand for Bitcoin being purchased, that never really materialized in a big way. We had the US government with a strategic Bitcoin reserve. It's hard to really know what's been happening there, but I would say based on the price action that certainly the government is not buying a huge amount, or would probably show up somewhere in the price action. And then we of course have Bitcoin treasury companies, which have turned out to be a bit of a disaster for investors in those companies, as I've been warning about. And demand has now turned negative, I would say, from these companies, with some companies like SQNS, for example, even becoming net sellers of Bitcoin, as we see here. I'll put a link to this in the description notes below, where they adjusted their debt ratios by selling some Bitcoin and putting cash on the balance sheet. Even MicroStrategy, we've seen the MNAV contract quite remarkably. MNAV still above 1 at 1.17 times, but then the BTC premium, if you're looking at market cap rather than looking at enterprise value, we're actually trading below the value of the Bitcoin on the balance sheet. This can happen, of course, when you have debt, and it's also a function of sentiment. But MNAV is probably the best way of looking at this. I'm not too worried about MicroStrategy. It really is the blue chip in the space when it comes to Bitcoin treasury companies. But it's hard to argue that the world needs as many Bitcoin treasury companies as some Bitcoin influencers might lead you to believe. So that's why I've always preferred just to own real BTC. Another headwind for Bitcoin this year, of course, has been the Fed has been a bit more reluctant to cut rates quickly than many would have imagined. Even when it comes to the December federal funds rate cut, markets currently pricing in about a 53% chance that we get a 25 basis point cut. The current Fed funds rate is, or the target is 3.75% to 4%. And so there's a 46% chance it just stays right there, and a 53% chance that the Fed does do a very small cut of 25 basis points. Now let's talk about the death cross on Bitcoin's daily charts. A death cross is simply when the 50-day moving average crosses below the 200-day moving average. The opposite of a death cross, which is bearish or can be construed as bearish, the opposite of a death cross is a golden cross, where the 50-day moving average crosses above the 200-day moving average. And I think technical indicators like these, I don't use them quite as much as I used to. In fact, I really don't use them at all. But I think they can be useful. I just don't think you should use them in isolation, but they should rather be used in the context of, for example, the broader monetary policy of central banks around the world, especially the Fed, whether it's tightening or loosening. Also, Bitcoin 4-year cycle theory, which we've talked about at the beginning of this video. And then, of course, sentiment, which would include not just trader sentiment, but also the sentiment around consensus wars and policy wars, as we've been seeing with the opportune wars of this year. And then also part of this context for using technicals would be to look at other fundamental drivers in terms of Bitcoin adoption and demand for Bitcoin, like corporate adoption, central bank adoption, and nation state buying demand for Bitcoin. So here's the famed death cross. We're about to have it. The blue line is the 50-day moving average. It is about to cross below the 200-day moving average, which is the red line. Again, this isn't the end of the world. We saw this happening in the middle, call it spring of 2025. It was sort of a fake out. And so these can be, when the market is chopping sideways, these will provide very bad trading signals. But when the market is getting ready to trend, then it can work quite well, as we saw, for example, at the end of the last cycle in early 2022, when we did get that death cross and the 50-day moving average cross below the 200-day moving average. We can see before that we sort of had a double top in terms of the Bitcoin's exchange rate with the fiat, with the US dollar. We had a double top, but then as the 4-year cycle came to a close, 2021 was the fourth year, we did get that death cross right at the end, right at the beginning of the following year. And then, of course, that was quite a good signal. We had BlockFi, we had FTX, we had Voyager, we had Celsius, we had all these companies blow up, Terra Luna in 2022. And so Bitcoin trended. It looks like the price of Bitcoin was approximately 48, we'll call it, $44,000 when this death cross happened. And of course, Bitcoin went down to $15,000 or $16,000. So I think looking at a death cross in the context of the multi-year cycle, where basically you've had 3 green candlesticks and then you get a death cross, this one might turn out to be more significant. Again, no one really knows for sure, but it certainly was a good indicator at the end of the last bull cycle, as we talked about. Now, what's this context? What's the context for the current death cross? The context that we've been focused on this channel in 2025 is that the reference implementation for Bitcoin's node software went rogue, namely Bitcoin Core, went rogue in 2025, for the first time ignoring consensus in the sense of community agreement and pushing through a highly contentious change to mempool policy, blowing open the opportune filter. And this, of course, opens the network up to all the dangers that come with relaying large blobs of non-monetary data, and thus making a soft fork to fix these things at the consensus level much more likely. The talk of forking has certainly been contributing to negative sentiment over the past few weeks, but fork wars have actually been historically correlated with positive price action. For example, Bitcoin rallied from $1,000 per coin to $20,000 per coin in 2017. Again, that was the end year of the cycle. That was the third year, so it might be a little bit different this time. That is an interesting precedent, and especially Bitcoin rallied really hard when the Bcashers, the big blockers, forked themselves away in August of 2017. If we look at Bitcoin's price action in terms of US dollars since Bitcoin Core version 30, which is this malware, was released, it was released on October 10th, and we can see that Bitcoin has basically been selling off directly since then. Now, of course, this doesn't correlation doesn't imply causation, as they say, but it is interesting to see that the market doesn't like this. Now, maybe these are macro drivers instead, and it's not really this, but it could be one of the things contributing to Bitcoin's bearish price action. So what comes next? I think we definitely do see a soft fork in the coming weeks to months. This will be bearish for short-term price action, obviously, but I think it's very important in order to return Bitcoin to a solid foundation that we can then continue our price appreciation against both fiat and gold. To modify Jefferson's famous saying, if it was Jefferson, the tree of monetary liberty must be refreshed from time to time with the blood of spammers and scammers. If you look at the history of Bitcoin and Bitcoin culture, it's a history of many civil wars, much infighting. And so if you're not aware of this context, I wouldn't stress out too much. I know some of you have been trimming your Bitcoin positions or even exiting Bitcoin because of it. I think that's the wrong move to take, because what we've in fact seen is we've seen the Bitcoin ecosystem routing around Bitcoin Core. Now nearly 20% of the network is running an alternate node software implementation. So this is actually Bitcoin behaving in a really anti-fragile way and routing around the attackers which come from Bitcoin Core. So I think this is long-term positive. Of course, the price action has been negative recently, and this contributes itself to negative sentiment. Sentiment is often just driven by price action rather than anything else. We'll be talking more about these two fork videos. I'll put a link to these in the description notes below. I still need to watch and digest them, both of these from Bitcoin Mechanic. The first one from 11 days ago called Fork, and then a recent one he published yesterday that I need to watch, which is about miner activated soft fork. So we'll be covering that hopefully this weekend if I'm feeling okay. In conclusion, though, I think it's quite likely that the bear market is already here. As Zaba points out, it really is already here when you take a look at the price of Bitcoin versus gold. But I'm not going to be selling any Bitcoin or trying to trade it or jump in and out. I don't think it's really a tradable thing. Capital gains taxes reduce your proceeds from selling when you take profits and then give you less money to reinvest. So this is one of the big problems. If you're paying 20, 23, 24% in capital gains taxes, then Bitcoin needs to fall by that amount just for you to get back even. So it may just not be worth it. And I think, especially if you have your Bitcoin tied up in cold storage, taking it out, sending it to an exchange, this is something that's fairly easy to resist. So I'm not going to be trying to time this bear market. If in fact it is a bear market, of course, Bitcoin can do whatever it wants. We could go straight up to $1 million from here. And so that's why I don't try to trade these things. Bitcoin is the most important investment of the century. And so I don't think this is something that you want to jump in and out of just like you would with a stock. So I don't think it's tradable. I'm not going to be trading it. I'm hodling. I'm not selling. The thing is, US dollar debasement is real, and it will accelerate as the Fed is eventually pushed to print in a really big way. And Bitcoin remains, I think, the fastest horse in the race when it comes to both the upside and the downside. It will appreciate much faster than gold. and it will also depreciate much faster than gold during these bear cycles. But even when you look at Bitcoin's performance against gold, it's massively outperformed for the last 16 years. And so gold is not really a contender in this race, though it certainly had a very good 2025. And gold is also not the way that you separate money from state. It's not the way that you get rid of central bankers. Gold, in fact, led us to the fiat standard in 1971. So gold is not the proper tool to fight central bankers. I believe Bitcoin still is. And I believe we can get to the bottom of all these problems. We can fork away the spammers, and we can start again with a very good foundation and basically restore everything to where it was maybe in 2023 before Bitcoin Core began to go rogue with the inscriptions exploit, with failing to fix that, and then with blowing open op returns. So I remain quite optimistic. As Max Kaiser, I think he's the one who coined this, Bitcoin has no top because fiat has no bottom. And that's why it's very dangerous to try to time Bitcoin cycles, which themselves are quite unpredictable. If we take a look at the US money supply, M2, as we were talking about, actually this is the total debt, 36 trillion in total public debt. And I think this is reported quarterly, so there's a lag here. This is actually more like 38 trillion as we speak. And if we compare that to the total debt, which includes all the off-balance sheet liabilities from Social Security, Medicare, we come up with numbers that are much bigger than 36 trillion or 38 trillion. You come up with 70 trillion to 137 trillion. When I've done these numbers, I think they're actually closer to 150 trillion. And so I think it's useful to compare the amount of debt to various forms of the money supply, whether it is what the Fed has on its balance sheet, which is about 6.5 trillion, or whether it's the M2 money supply, which is 22 trillion. Both of these are going to have to eventually rise to the level of the debt. If you have all this debt, you need at least that many dollars to service them. And so what is going to happen is that the U.S. money supply and also the Fed's, what the Fed is holding on its balance sheet, the Fed's going to be the ultimate buyer of all these treasuries. And so you're going to see the Fed's balance sheet go from 6-7 trillion to 100 trillion and beyond, because there really are no buyers ultimately for this debt. The foreign buyers have dried up. Domestic buyers, you can stuff some of it into bank balance sheets. But this is one reason that I remain a long-term Bitcoin bull in spite of things like the death cross and short-term price action, perhaps turning negative, perhaps 2026 being negative. But the long-term fundamentals for Bitcoin are still extremely, extremely bullish. Still expecting Bitcoin to go up basically forever because Bitcoin has no top, because fiat has no bottom. So certainly expecting to see $1 million, $2 million, $5 million Bitcoin in the coming years. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.